The rupee has had a strong run today. The currency hit a 7-month highs on the closing levels, and the strength comes in on the back of performance in the Indian equity markets. Let's get on board Murthy Nagarajan, who's head fixed income quantum AMC, and he joins us with his expert take on the currency. Murthy, hi, welcome. What a day it has been. I mean, we opened on the lower side at 61.26, but the closing has been much higher, a 7-month highs. We of course have seen strong FI inflows, but the question really is it sustainable?
Yeah, actually a lot of money seems to be flowing now. Previously the money flows in the month of January and February was in the debt side. Now money has started flowing in the equity side also, so which is good news. And your current account deficit has also come around 4.1. So all these factors together seems to suggest that we are in a bull run as far as equities, as far as the rupee is concerned. What we expect is that around 60 levels we expect RBI will come and start intervening in the market because he has to build up the forex reserves. So I think broadly we see a trade of around 60 to 63 as far as the rupee is concerned against the dollar.
Murthy, what's your sense? I mean, as you said, the rupee is expected to trade within that range. What is your expectation of the kind of cues that we will see going forward the next quarter? That would be the elections quarter, and markets are talking about this pre-election rally. Do you see it easing as we get into that period?
Yeah, I think only thing which can stop the rally is a fractured mandate. Other than that, you should see a good run as far as the rupee is concerned, because we expect that improvement in the marketplace and the view on equity being positive. I think you should see good amount of flows coming in the market, and if with the gold imports still being on place and your current account deficit numbers next year also expected to come to around 30-35 billion. So we expect the rally in the rupee rally may continue for some more time. And if you have got a stable government in the center, you will have a good rally. You will have further good rally. But what I want to say is that whenever there is a rally below 60 levels, we should see RBI coming and buying in the forex market, because he has to recoup the amount of money which he has actually borrowed. 33 billion has been borrowed last year to fund because of the crisis which we had. Now this 8.5 billion is getting redeemed in this current financial year, and after 2 years you have got around 25 billion which has to be redeemed. So based on that, RBI will build up this forex reserve. So we don't see rupee being below 60 for a long period of time, because we expect RBI will come and buy.
You know, for the exact reasons that you just gave, a lot of people expect the rupee to depreciate as well going forward, because there's a lot of preponing of money, dividends and, swaps, all of that. So once you start redeeming, do you see that putting pressure on the currency?
I think if we have got a stable government in the current financial year, you should see that this should be taken care of. I don't think that will be a problem for the market. The problem for the market is that if the mandate is fractured, in that case we should see the currency depreciating, because your currency appreciation is based upon FII flows, and if FII flows stops also, or if it comes down gradually, then you should see the currency actually depreciate and not appreciate.
Till time we have been talking about the internal factors, but how would you look at the Asian markets, Murthy? Because the day started on a weaker note, remember, because of the Chinese trade data. The emerging market currencies are slightly on a shaky note. How much of that impact would you see coming in?
So actually, if you look at the market in the last 10 days, 15 days, we are actually sort of decoupled from what is happening in Asia. Like whenever we are seeing the currencies, other currencies appreciate, whereas our currency appreciate. But you have to take it in the total perspective. Like what has happened in the last 1 year, we have got one of the severe depreciation. We and the Indonesian rupee has shown the highest amount of depreciation. And these are the two currencies which are showing the reversal trend which is happening right now. Because what is happening is that the Chinese data is, what we are seeing is that the China data is coming weak, but our exposure to China is very less. Our exports to China is only 19 billion. Whereas countries like Korea and all, their exports is around 167 billion. So compared with us, 19 billion, 167 billion, those countries which have got high exposure to China, those are the currencies which are showing a depreciating trend. Whereas countries like India is showing an appreciating trend because our exposure to China is very limited. So, and the Chinese economy weakening, we are not getting affected that much as compared to the other Southeast Asian countries.
Point well
like
made,
Korea,
Murthy.
Japan and all.
Sure. Vijay, let's get you in the conversation also. With the kind of highs that we seem to be making, a 3-month highs on Friday, a 7-month highs on Monday, how are the charts showing now for the day tomorrow?
Manisha, I would still stick to my view that the scope for appreciation of the rupee remains limited. To me, this seems like a trade getting ready for a setup where I would start preparing a buy opportunity on the USD INR. If I was to see another 0.5% appreciation in the rupee, I would start looking at buy opportunities on the April month futures rather than March, because March, we are already midway through the derivative cycle, so I would start looking at buy opportunities in the April month futures. And I'm betting on the fact that before the month of March runs out itself, I will get a clear cut opportunity to exit with a profit on these long positions, because before 31st March, I expect a technical rebound on the USD INR, which will probably go well past the 61.50, if not 62 levels. So I would be happy to buy the USD INR at a 0.5% decline from here.
So Vijay, as Murthy was pointing out, it is going to be between 60 to 63 according to him as we get into the new quarter as well. On the charts, are you looking at those figures?
Yes, I am, Manisha. If you look at hurdles for the USD, I think your primary hurdle will be 62.25 and then 62.80, 63.25. These are levels that we need to watch out for. I think the scope for appreciation of the rupee beyond 60 is fairly nil.
Okay, so that's the verdict coming in from both our experts. 60 to 63 is the level of rupee to watch out for. Murthy and Vijay, thank you so much for coming by with your sense on the currency happenings.